A new report shows the number of home foreclosures fell in October for the third month in a row, thanks in part to foreclosure prevention programs that really come to the rescue of homeowners on the brink. Losses are still way up from a year ago, almost 19%.
In the meantime, the Federal Housing Administration, which backs up many of the nation's home loans, appears to be running low on cash. Diana Olick follows real estate for CNBC. She is our real estate guru. Diana, thanks so much for joining us.
Sure.
Let's start with the foreclosure rate, first of all, because usually when we hear that foreclosures have fallen, there's a caveat, but there's a moratorium on them. Is this good news, or how would you characterize it?
Look, it's definitely good news to see the numbers going down anytime you're talking about foreclosures. The caveat, of course, is that you have to look at what the banks are doing under the Home Affordable Modification Program, which is the government's foreclosure bailout, if we want to call it that. They're slowing down the process to get to foreclosure. They're keeping a lot of loans in that pre-foreclosure bin, trying to get them into modifications, into trial modifications. We got a report last week that showed that now the more than 650,000 borrowers are in these trial modifications. What we are not hearing is how many of those modifications are successful, that is, have gotten past that 3-month period with borrowers continuing to make payments. So, yes, it's good that the foreclosure numbers are going down, but we could be seeing a new wave of foreclosures at the beginning of next year as we start to see those pay option arm loans start to reset. And also as the economy continues to worsen, if we don't see jobs improve, then we may see higher numbers in foreclosures.
You hit on the big question in there. I mean, are these programs working? You said they won't give you the data necessarily to show it. When we hear slowing foreclosures, that sounds good because you want people to keep their homes. But if it's just putting off the inevitable, then it's not good because it's making it take longer for the housing market to clear. What are other people saying about whether they think that the modifications are working or not?
Well, again, we don't have real numbers on it. What I'm being told by some folks is that a lot of people are not making the payments on these, and that a lot of other people's have been extended through the 3-month trial period into, say, a 5-month trial period because they're having trouble getting all the paperwork together. Now, remember that the paperwork is documentation of income. A lot of loans were made during the height of the housing boom, what they called low doc, no doc loans, or some people called them liar loans. These are where you didn't even have to tell you how much money you made. Now they're asking for those documents, and if they don't get them and they don't get proof of income, then you could fall out of that modification.
And what's the deal with the FHA, the Federal Housing Authority, running out of money?
They're not running out of money right now. What happened is that they've fallen below the 2% capital reserve ratio that's mandated by Congress.
So they're supposed to keep a certain amount of cash on hand.
They're supposed to keep a certain amount of cash in reserve. They still have a lot of cash in reserve. And remember that they're part of the Treasury. They can just go to the Treasury's ATM, as it were, whenever they need it and take more money. Obviously, they're not going to want to do that, and they say they're not doing it. But by falling below at a historic rate to this low level of reserves, what they're doing is getting a whole lot more political pressure and pressure from the housing industry to kind of tighten up their standards there. They are tightening up on the risk. The question is, will they start raising FHA premiums or raise the loan limit, et cetera, or the down payment?
Yeah. All right, Diana Olick, thank you so much.